The financing risk to advance the project has been taken care of with this agreement with Dundee. So it means there's not going to be a big 150 or 200 million share dilutive financing that's going to hit the market in the next 2 or 3 years, because we're not going to need to do that. If we plug $4,000 gold into our PEA model, we end up with a net present value that's over $1 billion. We have 1 million ounces now. This is how they kind of grow, is you find the first 1 million ounces, and then we will find more ounces and more deposits along this belt.
With gold now back above $5,000, we're all wondering whether or not this is a stabilization period, or is there going to be more volatility to come, and how can we prepare if there is? Well, joining us to discuss this is a CEO in the mining industry. He is a CEO of Westhaven Gold Corp. Ken Armstrong joins us today, and we're going to be talking about his views on the gold market, as well as Westhaven's newest developments and projects. Welcome to the show. Good to see you, Ken.
Thanks, David. It's good to be here.
The company is also listed today on the OTC exchange in the U.S. under the ticker WTHVF, and it was previously, well, still is, on the TSX Venture Exchange under the ticker WHN. So we'll talk about your new listing and what this means for the company strategy overall. But let me just pull up a chart of gold and start with the gold market first, Ken. This is a chart of gold going all the way back 5 years, and I want to just actually zoom out to 2011. People are wondering whether or not we're in this phase here, repeating this phase in 2011, which is a slight pullback before consolidation, or we're beginning this longer-term downtrend that we started to see in 2012 that culminated in a trough of around $1,000 in 2016, you recall, 2015. Sure. Which phase are we at if we were to repeat this phase? And maybe this time's different, and 2011 is not even a good reference point anymore. What do you think?
Well, I think I view it as there's a fair bit of volatility right now, uncertainty, and that's not necessarily going away anytime soon. So it is a bit of a different world with where we're at, and revised interest just in globally, and particularly we see in the Western economies in mining that we haven't had in quite a while, right? Where there's discussion about we need minerals, we need the mining industry to be successful. Gold is not a critical metal, but it's very critical to economies and to regional economies in Canada and in other countries. So I think the platform is there, and then as we get into it with Westhaven, our projects don't need $5,000 gold to be of interest as a development opportunity, and we don't even need $4,000 gold. So it's all constructive for us in what we're doing as we look to kind of execute on our projects here in British Columbia.
Yeah, I'm going to get to your company and the developments in just a minute. From a geologist standpoint, let's talk about gold for a geologist. So $5,000 gold, what does that mean for geologists versus, let's say, when you first started in the industry when gold was much lower?
Well, it does mean you can look at different areas, and obviously it expands sort of the margins on the cutoffs for resources will drop and so on. And I think right now, though, it's happened so fast, really, when you look at this rise, is that there's going to be a leveling out period while we try to figure out what to do with these prices in terms of projecting long term. So I think as a geologist, looking for where you're going to look for gold, that hasn't changed, right? The geology where we look for these deposits is the same, and I think the long term metrics, the long-term prices will increase, but the basic fundamentals that we'll look for in trying to find deposits and mineralization of interest to the market of what could potentially become a mine really doesn't change that much. It's all around the economics that there'll be that change going forward.
You mentioned gold is not really an industrial metal, and I wonder if you can comment on what are the industrial properties of gold. And I'm asking this because there are all sorts of monetary and macroeconomic reasons for why gold may have run up to $5,000, but I'm wondering whether any of this had to do with perhaps more industrial demand for gold's industrial properties. Can you comment on that?
Yeah, I don't think it has to do with sort of the basic properties of gold, which are pretty amazing. It doesn't rust. It doesn't. It's sort of malleable and beautiful to look at, and it has good industrial applications in space and high-tech industries and so on, but it's not meaningful, largely because it's so expensive. I mean, it's real. The real interest we're seeing in it is as a store of value for people, and I think that's why the price has gone up, and we're seeing banks buying gold back now, that sort of thing.
Can you expect exploration rates to dramatically increase from here on at $5,000 gold?
Well, certainly there'll be funding, right, which we haven't seen in the exploration space for quite a while, right? We've been a um, very poor exploration market, so companies are funded, so we'll see more activity. We are seeing that just in availability of some of the support services that we need for the work that we're doing. So yes, we'll see a more robust exploration sector and a busier sector, but all that is, I think, positive for us. That the main thing being that we're seeing our sector in the headlines and business sections of newspapers, which we haven't seen for a while.
Can you comment on peak gold, whether or not we've reached peak gold, and then maybe comment on whether or not $5,000 gold is the cure to peak gold if we have it? In other words, high prices beget more exploration and development, which is the cure for peak gold.
Sure. No, I would probably say no, because with the increased exploration and development we're going to see, we should see production increase and discoveries increase. We can find, I think as geologists, we can find more of these deposits.
But is that a function of the price of gold? In other words, if gold goes up, exploration and development activity goes up as well?
Yeah, it will. And then just what we touched on too, that cutoffs will drop. So we're recovering more. We're able to go after lower grade deposits.
Okay.
In the big picture.
Well, you mentioned earlier that Westhaven Gold is not dependent on $4,000 or even, $5,000 or even $4,000 gold. What do you mean by that?
I think just with our deposits, we've discovered a series of low sulfidation epithermal gold deposits in southern British Columbia. And we've resources that we've discovered and defined so far, just right around 1 million ounces in 3 deposits, are developable with a grade of that diluted grade in our PEA, which is 5.2 grams per ton. That this is a high grade underground gold mining opportunity, and epithermal deposits like this tend to be high grade, high margin deposits, and that's what we've mapped out at our deposits in the Spencer's Bridge Gold Belt, which is what the rocks are called. And they're easily accessible. We have excellent infrastructure. There's a 4-lane highway that crosses our mineral claims. There's a power line that comes up right up to where the deposits are located. These can be developed, and in our economic study that we put out in 2025 was a preliminary economic assessment, but our all-in sustaining costs are under $900 US an ounce produced. We have really good margin at current gold prices.
Well, tell us about, give us an overview of the project. So I'll pull up your website here. You mentioned in BC, was this a greenfield exploration or brownfield? Is there a history or prior development on this region?
It is a greenfield discovery that Westhaven made in 2018, 2019 on our Shovel Nose Gold project. So it's the southernmost of the properties that you can see on the image here. They lie in the Spencer's Bridge Gold Belt, which is a belt of volcanic rocks. It's kind of that ghosty gray color you see on the map, are the rocks that host these epithermal gold deposits. We made the discovery on Shovel Nose in 2018, what deposit that we call the South Zone. But we have 4 properties over in excess of 100 kilometer strike extent of this belt. The first sort of discovery hole in the belt was actually up at Skoonka about 20 years ago. That was a discovery on a showing epithermal, again, low sulfidation, gold-bearing epithermal quartz veins. It was 20 grams per ton over 12 meters. This is a highly or well-endowed belt of rocks where these deposits can be found. And what's really important for Westhaven is and I'm sure we'll get into this, is we've just announced an earn in an option partnership with Dundee Corporation, which is going to see us funded to properly realize on the exploration potential we see over this belt of rocks, while we also pursue the development opportunity on Shovel Nose on the deposits that we found already.
And I've noticed just on this map here that it's situated next to some operations owned by large producers, namely New Gold and Teck. What does that mean for your development?
Yeah, and Highland Valley down to the south at their Copper
Yeah.
Mountain mine. It's an important distinction. I mean, I've been in the seat as CEO since May of last year, and pretty quickly realized that when marketing and we say that we've got a gold project in British Columbia, people say, "Oh, that's great. Where in the Golden Triangle is it located?" The Golden Triangle, of course, is up in northern BC. It's been a very good marketing platform for projects up in that area. What I would say is that we're in a region in southern British Columbia next to the Highland Valley mine of Tex, New Afton mine, and Hud Bay with Copper Mountain. Talisker is reopening the Braylorn mine in this region. Cisco Development is building the Caribou mine. This is an area that is really well endowed with a number of different rock types that host a number of different deposit types. So an endowment that I think is equal to what we see in the Golden Triangle, but with far better infrastructure. As I mentioned, we've got highways, power. All of that leads to a lower cost of exploration. We don't have the seasonality. We don't get heavy snowfalls that prevent drilling. I think as we're just starting the second week of February right now. Next week we are starting drilling on our property, and we're going to be drilling through to the middle of December. All of that is a massive advantage to evaluating deposits in this region and our shovel nose project.
I guess what gold price would you be using for your pre-feasibility study right now?
Well, so the PEA, so the preliminary economic assessment from last year, we used $2,400 gold. And at that price, we had a net present value in Canadian dollars of 450 million at a 6% discount rate. And it was over a 40% internal rate of return. And it's 11-year mine life, producing 56,000 ounces of gold a year and just over 300,000 ounces of silver. And that, again, as I mentioned, we had an all-in sustaining cost of under $900 US on that. For the next steps, when we look towards a pre-feasibility, I think it's a point of discussion. What kind of gold prices are we going to use? I think we're going to start to see $3,000 gold used in these studies. If we plug $4,000 gold into our PEA model, we end up with a net present value that's over $1 billion. It's highly leveraged to the price of gold in that way. But again, importantly for us is the project is very attractive economics, even at gold prices that we were using a year ago.
Okay. And let's just talk about the company's finances, starting with the shareholder structure. So you've got primary strategic and institutional investors. We've got a lot of big names here: Eric Sprott, Franco-Nevada, Dundee, you've already talked about. And these, I suppose, occupy 39% of the insider ownership with... Yep. Directors and officers at 16%, friends and family at 4%, retail investors at 41%. I'm wondering if this distribution will change now that we're at $5,000 gold versus just a year ago, which was 100% or 50% of current levels. Are you planning to attract a different type of investor with the way the market is behaving now?
I think we could. I mean, we're going to be marketing our partnership with Dundee and our plans going forward quite heavily over the next 12 months. It's part of the reason for the OTCQB listing that started today. One thing I'd point out on that with the insiders at 16%, that's really important, I think, for people to keep in mind. This company is 15 years old. Yeah. So to have that kind of insider ownership, that represents continued investment in the work that we've been doing, into the discoveries that Westhaven's made. And I think it's just important to keep that in mind. The agreement that we have with Dundee, and I'm sure we'll talk a little bit more about the details on that, but Dundee is going to fund or can fund up to the next $85 million in exploration and development on these projects going forward. Our share structure at fully diluted at just over 300 million shares outstanding. I think the main point there is to take away is that that's not going to change now. The financing risk to advance the project has been taken care of with this agreement with Dundee. So it means there's not going to be a big 150 or 200 million share dilutive financing that's going to hit the market in the next 2 or 3 years, because we're not going to need to do that. We have enough cash on hand with close to $4 million in the bank now. We have warrants that are coming in. We have about 35 million warrants that are in the money at present. They will all come due in the next 6 to 18 months, and we'll realize over $6 million Canadian for that, which all more than covers our G&A and our capital costs and our marketing budget for the next several years. So I think that's an important thing to just just keep in mind that our share structure is what it is now going forward, on the back of our transaction with Dundee. So that agreement with Dundee, if they make the full $85 million investment, they'll earn a 60% interest in the projects. So Westhaven will retain the 40%. It's a well-structured earn-in and joint venture arrangement. For Westhaven, keeping 40% in a joint venture scenario like this was really important for us. It means that we retain a meaningful interest in the project as we move along the development path through pre-feasibility into feasibility, and as we test our exploration targets and conduct more exploration drilling to find more ounces in the belt. The agreement includes a firm commitment to fund the next $30 million. Our market cap when we announced this agreement last fall was about $40 million Canadian. So that was a meaningful commitment from Dundee to spend, and we're looking at a budget in excess of $20 million for 2026. We're just finalizing that. We expect to provide more color on it to the market in the next couple of weeks after a shareholder meeting that's coming up. Our Westhaven shareholders need to approve the transaction with Dundee, right, and that meeting is set for February 17th. With retaining the 40% interest, I think another really important piece is the fact that we retain flexibility to transact on our interests. So we're not handcuffed in any way by rights at the of refusal or any restrictions in that way at a corporate level. We have full ability to transact going forward. And then the third really important part of this agreement is the cultural fit with Dundee and their team. They're very strong. They have built mines internationally on this style of deposit before. They bring in expertise on the project side, on the resource side, that really complements the team that Westhaven have been putting together. We have a strong group that has discovered and evaluated and put deposits into production in Canada and internationally. And we were putting together a team fully prepared to advance this through pre-feasibility, feasibility into construction ourselves. But we believe with the partnership with Dundee and their team, it makes an even stronger platform for the project and for the companies going forward.
But you own 40% of interest. So how do you share, or I guess, partner with Dundee in terms of management duties and strategic oversight?
Yes, we remain operator until Dundee earns a 50% interest, which is at the $65 million level, and then they'd have the right to do that. As a standard in this sort of agreement, there's a management committee. We both have equal participation, but Dundee does carry the right to have final decision on budgets and programs. On the cultural side, though, part of what makes this so comfortable is that we have a really clear alignment in our view on how best to move forward with the projects. That became really clear during their due diligence last fall, and it's a very comfortable fit going forward. Once we form the joint venture, then again, there'll be a standard management committee with that, and that whoever has the majority interest in the joint venture has the casting vote on programs and budgets going forward.
So you were speaking on the 9th of February. You just listed on the US OTC exchange. Why do you need to list on the US exchange if you've already been funded by Dundee?
Well, it's part of our marketing. As I mentioned, we think that now is the time that we really need to get the word out, and we're in a position to be able to properly market what Westhaven has and what we can be in this partnership within the Spences Bridge Gold Belt, in an area with real exploration upside. We're going to find more ounces. These sorts of systems, we have 1 million ounces now. This is how they kind of grow, as you find the first 1 million ounces, and then with sort of sustained careful exploration, we will find more ounces and more deposits along this belt. We think there's a chance here to define a number of deposits that can be developed to turn this into a multi-generational mining camp, and we want to communicate that to the market. So we've started a retail marketing campaign here in Canada, and then just now with the OTC listing, we're going to have a focused retail marketing push in the US, also in Europe. We're in a position where we can have a full marketing budget, but that we also can be marketing a project where it's not just aspirational about what we want to do. If we can find the funding to do the work and the activities that are required, we are funded to do that work now. So it's quite a key change in our messaging, and we want to get that out. And the OTC listing is an important part of that. 39%
of the shares outstanding owned by institutions. That's a fairly high ratio compared to your peers. Explain just to the layman how a company like Westhaven plays a role in an institutional fund?
Well, I think it'd be, yeah, those funds would be obviously on the more sort of venture side and
Okay.
looking for that raise, and the interest we were getting is largely because Westhaven was a name that through last year, as the gold price was going up, we were sort of setting the table for ourselves in terms of what we wanted to do next. We didn't really participate in the rise in share price that a number of other juniors did, and I think that they are positioned now in a way to be partners with us as we sort of build out the development opportunity that we see, and the exploration upside, because this has a long way to go now in terms of an investment opportunity, and we're really positioning ourselves. If you think of through last year, the rise in gold price was really realized very quickly for gold producers in their financials. Investors started to look at, okay, who's in construction or just got their permits and is going into production in the next year or two. I think Westhaven is well positioned in that next tier of entering pre-feasibility, feasibility, and have an opportunity to get into production in this cycle, which you could call sort of in the next 4-year sort of time frame.
So let me just show a chart of Westhaven's share price here. This is as of the last 12 months, so it's up 92%. If you compare that to the gold price, gold is up 74. So Westhaven has beaten gold by the order of almost 20% over the last 12 months. This was a bull market for the entire industry. So that's not a surprising fact that I've just shown. I think of retail investors going to the retail side now, which is the other, I think, 40-something percent of the shareholder structure. Retail investors would like to know what maintains leverage to the gold price, because ultimately that's what a lot of people are looking for when investing in the junior space.
Yeah, I think the leverage comes from true leverage will come from exploration success,
Okay.
and finding new deposits. I mentioned sort of the million ounces. That's in 3 deposits. The bulk of those ounces are in one deposit that we call the South Zone, which is a fully preserved sort of epithermal system, and we have some information on our website that talks to what we've done in terms of building out an exploration model to find more of these, which we really believe that we can do, because to have a system that has sort of a single deposit of this type that has sort of 750,000 ounces in it, that's a big pod, and it means that there was a big system there, and there should be more. So it's the exploration upside. But then we also have the backstop, which is what we've discovered already, and the development opportunity that's been mapped out on the deposits that we have found, and getting them into production in the cycle with the economics that we touched on, that at $2,400 gold look really compelling and look even better. I mean, it's $1 billion valuation and NPV plus on what's been mapped out so far. And that we think we're just getting started in terms of what we ultimately can get to in this camp.
Tell us a little bit about your career as a geologist and a geoscientist leading up to Westhaven.
Yeah, so I am a geologist, so I'm kind of technically driven. Ira Thomas is the chair of Westhaven. I met Ira at the Diavik Diamond Mine in the mid-1990s. I was there working with Kennecott, which is part of Rio Tinto now. And that's when I got to know her and Gren Thomas, who was a founder of Westhaven. I left Kennecott in whatever it was, 1997, and I actually started working with Gren and Ira then at Aber Resources, and then moved through a series of junior companies, largely in the diamond space. Was running a company called North Arrow Minerals up until taking on this role a year ago. And also involved with another company called Cornish Metals, which is reopening the South Crofty Tin Mine in Cornwall in the UK. I'm a non-executive director there. Spent most of 2024 as an interim CEO in that company. So a lot of time spent in Canada, and have worked, I think importantly when it comes to Westhaven, with the team that I mentioned we put together. We've all worked together in different companies at different times, on different projects, in North America and around the world together. And we have a really deep bench strength, I guess you could call it, in terms of our ability to advance this company and these projects.
So given your career working in a pretty diverse set of jurisdictions, tell us why BC is unique.
Yeah, good question. I mean, it's stable. BC right now, I think there's been sort of headline news on permitting and so on here, which I'm not sure is entirely um, warranted. Um, Mines are getting permitted. We just saw this with Skeena just last week. They got their permit here. As I mentioned, Cisco Development is permitted and is building the Caribou mine. Talisker is reopening Braylorn. It's an area where the government is saying the right things. There's a recognition at the provincial and the federal level that our economies need mining. We need these projects to be developed. I think that Shovel Nose, our main project, is a really important regional project. We're in just half an hour south of Merritt. All of our support and our field office is based there. About half of our field crews live in Merritt and surrounding communities. Merritt's an industrial town. It was kind of a hub that supported the expansion of the Trans Mountain Pipeline project, which is the oil pipeline that got twinned from Alberta to the Lower Mainland here in British Columbia. That project is now done. The area and the community are looking what are the next projects that can get developed. We're not far from Teck in the Highland Valley mine, which is going through an expansion and has been in production. So it's a region that understands mining, understands the benefits of mining, and it's an opportunity to do something that's close to home, and it is a greenfields discovery, as we mentioned. So it's a chance to actually build something out from scratch and do it properly, and as best we can. So I think it's the opportunity side of things that really has attracted me to this.
And finally, milestones, major critical milestones that investors should watch for.
Yeah, well, biggie is soon. It's the shareholder meeting, February 17th, to consider and approve the transaction with Dundee. That kind of allows us to really open the doors. We'll be able to provide more color on the 2026 program. It's going to include a significant amount of drilling. So we're figuring that we're going to have 4 drills on the project this summer, which has not happened on this property before. That drilling will be split between infill drilling on the resources in support of a pre-feasibility study, so can look for movement on that whole process. And then the other part of the drilling is going to be on exploration upside, testing a model that we've been working really hard to put together to identify additional resources and deposits on the Shovel Nose property through this year. There's going to be pretty newsy.
Well, I'll put the company's website in the description down below, so people should check out Westhaven for more information and keep up to date. Thanks, Ken, for your updates. We'll speak again soon.
Thank you, David. Thanks for having me.
Thank you for watching. Don't forget to like and subscribe.